Welcome to 𝐊𝐶 TV. I'm Rose Jacobs and you're watching The Buzzing Trends. Today we'll take a look at the airlines of Qantas and their journey and understand why its share price is currently on the move. Shares of ASX-listed Qantas Airways has been plummeting. That's ever since the company shared the news to officially grant a leave of absence to around 2,500 employees. On Tuesday, Australia's largest airline, Qantas, stood down around 2,500 employees for a minimum of 2 months to cope with the fresh restrictions imposed in Australia to contain the spread of coronavirus. Coronavirus cases have been increasing daily in Australia for more than a month now. With the situation worsening, the government has in fact put stringent restrictions in place, and the impact has slashed the domestic travel demand. Australia's city of Sydney has been left reeling under COVID-19 pressure, with Greater Sydney going into lockdown for another 3.5 weeks. Shares of ASX-listed Qantas Airways have been plummeting ever since the company shared the news to temporarily stand down the 2,500 frontline Qantas and Jetstar employees, as reported by the Australian Securities Exchange. The company, however, expects no long-term job losses. The latest move is expected to have an impact on domestic pilots, cabin crew and airport workers, mostly in New South Wales. The airline also said the employees will be served 2 weeks' notice before the stand down, with the staff being paid in full for their notice period effective now. The company also informed that disaster payments from the government would assist employees to face this challenging period. In addition, Qantas and Jetstar have been operating at less than 40% of their usual domestic flights in July, down from nearly 100% in May due to lockdowns in 3 states. The company was hopeful of domestic flights returning to nearly 50 or 60% of normal levels once other states reopen borders, including South Australia and Victoria, and the current outbreak in Brisbane is deemed to be under control. Qantas's shares closed at $4.46 on the 5th of August 2021, 22.9% off from its 52-week high of $5.79, recorded during the last week of November of last year. However, to understand the real picture, if you look at the historical data from the past 12 months, Qantas's share price has in fact edged higher, delivering returns of 34.74% to investors. It's not just Qantas feeling the effects. Several other ASX-listed airlines are being impacted during the recent resurgence of coronavirus cases. To give a clearer picture on the overall airline industry in Australia, let's take a look at the airline stock of Regional Express, or Rex, as it's also known, announced on Tuesday that it had signed a letter of intent with a lessor for the lease of 2 Boeing aircrafts. The 2 aircrafts are expected to arrive in late August, increasing the airline's fleet of 737s to 8, and are scheduled to enter service on their domestic network in September. As of now, Regional Express is operating 737 services from Melbourne to Sydney, the Gold Coast, Adelaide and Canberra, and from Sydney to the Gold Coast. The 2 additional aircraft will provide the airline with the ability to launch new routes to other capital cities, as well as large regional centres and popular leisure destinations. The new routes will be announced shortly. Currently, Regional Express is operating a fleet of 60 Saab 340 and 6 Boeing 737 aircrafts to 61 destinations throughout all states in Australia. We will be talking more about Regional Express and also a glance at Alliance Aviation, but after a short break.
Property by 𝐊𝐿𝐴. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐴 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐴.
Yeah. Welcome back. I'm Rose Jacobs and you're watching The Buzzing Trends. Before the break, we were discussing the latest updates from popular airline Regional Express. The airline said the latest COVID-related state border restrictions have severely disrupted their domestic and regional networks, forcing the company to cancel many flights to and from Melbourne. The share price of Regional Express gained as much as 16% in the last year as of last close. It was spotted trading at $1.20 per share. The company is hopeful that it will finish the financial year of 2021 with a break-even situation. Next on the list is Alliance Aviation. Its shares were in high demand among the investors after the release of the half-yearly earnings update in December 2020. The company reported profit growth on both the higher margin contract and charter flights, which counterbalanced weaker wet lease and recreational pilot licence revenues. Even the company's operating cash flow is healthy. The robust earnings came at a time when coronavirus pandemic significantly impacted the sector's overall business. Alliance Aviation reported a 2.3% rise in total revenue and a 116.8% surge in profit before tax for the 6 months ending 31st December 2020. The 72% jump in the underlying profit before tax to $26.7 million was in line with the company's half-year guidance. Similarly, operating cash flow was recorded at $47.5 million, a 225% rise from the corresponding period last year. The company's net debt stood at $6.8 million during that period. The shares of Alliance Aviation have jumped 23.6% in the last 12 months. On Thursday, the stock closed at $4.45. The year-to-date returns for the stock stand at 19.62%. With that, it's time to wrap up today's show. I hope you found today's show informative. Stay tuned for more news and updates on 𝐊𝐴 TV Live. I'm Rose Jacobs. Thanks for joining me.